Hi, my name is Irfan Azmi bin Zamzuri. I am from class JPA 1144B, and today I am presenting to you a topic on how investors use financial ratio to understand a company's performance. Without further ado, let's start with the first slide. What is financial ratio? Financial ratios are useful indicators of a firm's performance and financial position. Moreover, ratios can be calculated based on information from financial statement. Not only that, financial ratios are used to analyze trends and to compare the firm's financials with other firms. There are 5 types of ratios, including liquidity ratio, activity ratio, leverage ratio, profitability ratio, and market ratio. So basically, these ratios will help investors to understand company's performance. I will explain to you how these 5 ratios will determine whether the company is doing well or not. We'll start with the first one, liquidity ratio. Liquidity ratio measures company's ability to meet its day-to-day operating expenses and satisfy its short-term obligations, which means company should have an adequate cash and other liquid assets on hand to service its short-term debt and operating needs. Liquidity ratio is divided into 3, which are current ratio, quick ratio, and lastly is net working capital. Next is activity ratio. Activity ratio compares company sales to various asset categories such as account receivable, inventory, and also net fixed asset. Activity ratio also measures how well the company is utilizing its asset. Inventory turnover, average collection period, accounts receivable turnover, fixed asset turnover, and total asset turnover are all included in activity ratio. The third one is leverage ratio. Leverage ratio measures the firm's financial structure. It also indicates the amount of debt being used to support operations and the ability of the firm to service its debt. It is a major concern to potential investors as higher risk means higher financial risk. Leverage ratio includes debt equity ratio, times interest earned, and also debt ratio. Other than that, profitability ratio. Profitability ratio measures a firm's return by relating a firm's profit to sales, assets, or equity. Higher profitability is better, which means higher profitability of the company shows that the company has performed well. Profitability ratio contains net profit margin, gross profit margin, operating profit margin, return on equity, and also return on asset. Lastly, market ratio. Market ratio tells investor exactly what portion of total profits, dividends, and equity is located to each share of stock. Market ratio includes dividends per share, price or earnings ratio, book value per share, earnings per share, and lastly is dividend payout ratio. I will show you how investors can utilize these financial ratios to understand the company's performance. As you can see, this is Fraser and Ms. Holding Bernhardt's financial statement. We will be calculating the financial ratio based on the financial statement and compare it with the industry average to see how well the company is performing. The first ratio that we will be calculating is liquidity ratio. The formula for current ratio is current asset divided by current liabilities, and the final answer is 2.21 times. Next, the formula for quick ratio is current asset minus inventories and divided by current liabilities. The final answer is 1.48 times. Second ratio is activity ratio. The formula for inventory turnover is cost of goods sold divided by inventory, and the final answer is 4.86 times. After that is average collection period, with the formula account receivable divided by credit sales times with 360, and the final answer is 53 days. Other than that, leverage ratio. The formula for debt ratio is total debt, which consists of long-term debt and current liabilities, divided by total assets times with 100. The final answer is 25.43%. Besides that, the formula for times interest earned is earning before interest and tax divided by interest expenses, and the final answer is 4.34 times. Last but not least, profitability ratio. The formula for net profit margin is earning after tax divided by net sales times with 100. The final answer is 10.06%. Next, return on asset. The formula is earning after tax divided by total assets times with 100, and the final answer is 11.71%. For the final session, I will be commenting on the company's liquidity, activity, leverage, and profitability ratio and compare them to the industry average. We will start with liquidity ratio. The company's current and quit ratio are lower than the industry average, and this means that the company's ability to pay back its short-term obligation is lower than the industry. This could be due to the fact that its investment in current assets is lower than the industry. On the other hand, activity ratio. The company's inventory turnover is also very much lower than the industry, and this could be due to lower sales or the company is maintaining too much inventories. Its customers also took a longer period to pay back their debt, as shown by the average collection period. Besides that, leverage ratio. The company's debt ratio is actually lower than the industry. This means that the company doesn't highly depend on loan because the company's borrowing is much lower than the industry. Meaning to say, the company might be paying less on interest, and thus, the company will be able to pay back their interest. Lastly, profitability ratio. Probably due to lower sales and higher expenses, its net profit margin is also lower than the industry. The company's sales is not generating as much profit as the industry. Its return on total assets is also lower than the industry, which means for every ringgit that the company invests, the assets are only able to generate a profit of 11.71% as compared to the industry, which is 13%. All in all, Fraser and Nips Holdings Berhad is facing a lot of problems with liquidity, activity, and profitability ratio. According to the financial ratios, investors will understand that the company is actually not performing well. Therefore, they will not invest in the company's shares. That is all for me. Thank you for watching.